Change coming in 2021. Commentators and journalists are writing about predictions of the roaring 20s. Google references to stock market and roaring 20s is growing, as making claims will make it so. Valuations are way too rich to open the door to anything remotely close to the bull market of the 1920s. The US stock market has never been so expensive compared to the fundamentals. But what fundamentals do we see in the housing market, and how will it help your bottom line? San Diego real estate market update. Stay tuned. It will answer all your questions. My name is Lenska Realty. I'm an investor and real estate broker and into charts and try to explain the real estate market with graphs and stats to help your bottom line. So please subscribe. Unbiased, true, real data coming up. When evaluating a real estate market, we look at sales and inventory numbers, interest rates, employment data, the HPSI by Fannie Mae, homebuilder sentiment, evictions, foreclosures, and forbearance. So let's dive into the sales and inventory numbers for December. Inventory was obviously the story of 2020. Will it continue in 2021? So let's look at the median home price. We finished in December at $650,000, up 13%. The median home price for detached was $748,000, which was a 14% increase over December 2019. And then median home price for attached, we ended up at $494,000. So overall, we were up double digit, and the average price per square foot is about $460,000. It still was a fast-paced moving market. We had an average days on market 26 and a median of 15 days. So practically, if you didn't sell it the first weekend, you were moving your property slow. Pending sales were up, and that's no surprise because usually December is a down month. So 2019, we mimicked a little bit more the natural or our regular seasonal patterns. So for sold listings in December, we ended up 20% at 2,162. And the attached ones in December sold 1,225, up 22.8%. But at the last couple of months, that curve, that steep incline we had since May, kind of leveled off in the last couple of months. So pulling those snapshot screenshots from the San Diego MLS, looking at August, it was at 656. If you go back to September, it was 655. October, November, kind of 645. And then the end of December, it was at 650. And looking at it today, it was actually at 640. So we're kind of flatlining or stalling with the median home price in San Diego. Is it just the calm before the storm? This is a snapshot of the inventory levels for actually the US. So will housing inventory decrease further in 2021 is the question. Back in 2019, when several commentators and people said they were bearish on housing, it was pretty clear that the sharp increase in housing inventories like we had it in 2005 would most likely not happen, and that was a good sign for real estate prices. So 2005 inventory increased and prices kind of went down. And since we have low levels of inventory since January 12th, practically prices were increasing. We have currently less than a month's inventory. This is the lowest it has ever been. How bad really is it? I just want to make a point of looking, if you have a client or you're looking for an average home, even as a rental, and what criteria do we use for an average home? Kind of a 3-bedroom, 2-bath, 1,500 square feet, right? So currently, out of our 2,647 total listings, take out the modulars and mobile homes and attached units, we come up units. Take out 914 because they're above 650 and we want to buy a house like a medium priced home, right? So take that out. We have about 406 homes. If you take out further the homes with no or one car garage, which amounts to 237, we come to 174. Now, who wants to live in Campo, Julian, Borrego Springs, or Boulevard? So out of these 175, 35 listings are in these areas. So I take those out and I end up at 139. So if you want to buy a house between Fallbrook and Otay Mesa, those are your choices. But if you're a high earner and you can afford a house between 650 and 800, woohoo, you're adding a whopping 154. So your choices are less than 300 homes. This is pretty amazing, and that's why a lot of homes get multiple offers and they also sell above list price. And right now, the percentage between list price and sales price is 103. And what do we know on this house? Is it the 2-bedroom and 2-bath, which is less than a medium home, right? Or it doesn't even have a garage. But it did sell in 7 days. And I just wanted to point out that this house sold $500,000, $500,000 above list price. And that's what we're seeing. Many sales above list price in any type of neighborhood. Mortgage and interest rates. 30-year interest rate was the lowest a few days ago at 2.65% for 30-year fixed, but it has been creeping up slightly. So the concern, however, is that it coincides with a potentially legitimate inflection point for rates right now. Those concerns were fueled first and foremost by changing of the guard in Washington, with strong supporting roles being played by vaccine optimism, deceleration in new COVID cases, and slightly tougher talk from the Federal Reserve. So it feels a bit early for the big turn in mortgage rate momentum for a variety of reasons, but there is definitely a threat that should be taken seriously until we see clear signs of correction. So a note of caution. But we have very good demographics that will help the largest cohorts, the baby boomers and millennials. So if baby boomers sell and millennials will buy, we should be in good shape. Even so, birth rates actually have been going down, but that will obviously be 30 years from now when those that generation will buy houses. Now, with all that good news, I gotta obviously talk about employment data. The U.S. employment rate sits about at 6.7%. A slump in restaurant jobs hit the U.S. job market particularly hard in December, but investors are betting the grim data will spur more bailout legislation. Across the pond, and international eateries are discovering that Brexit has made business even tougher. So Elon Musk has landed atop the biggest cash pile, and China bottled water king is richer than Warren Buffett. as the fortunes of the ultra-rich soar while much of the rest of humanity struggles to get by. Calls for a wealth tax have gone global. Obviously, the stay-at-home professionals loaded up with discretionary income are splurging in expensive cars. Meanwhile, airlines are offering ultra-cheap fares to get people flying again. And that's what we call the K-shaped recovery. San Diego's December unemployment rate was at 8.9%, but there are an additional 8.4 million receiving pandemic unemployment assistance. That decreased from 8.4553,000 that previous week. This is a special program for the business owners and self-employed independent contractors or gig workers not receiving other unemployment insurance. But in addition to that, we still have 4.5 million on pandemic emergency unemployment compensation. Initial claims are also up. They peaked at 5.8 million total, and it's currently back up to 820K US-wide. In California, we are about 170,000, which is also a reversal. We were down at 150,000. And no wonder if you look at the blue line right here, that has been the California for the restaurant reservations. We can see that the fight against Newsom, and that you can't get the virus at Walmart, but you can get it in an outdoor restaurant. So these people are very hard hit. The Home Purchase Sentiment Index for December by Fannie Mae gives us, it's a sentiment out of a couple of indexes. They survey people and ask them, is it a good time to buy, sell? Will home prices and mortgage rates go up or down? And obviously how secure people are in their job and in their future income. So again, the HPSI fell about 6 points to 74 in December, declining for a second consecutive month. So we have seen reversals in the initial claims, reversal how people feel about buying and selling homes. And here are the details. Buyers and sellers are reluctant. The mortgage rates are the only bright spots. So you see a lot of minuses here. So we're practically less likely to buy a house, sell a house. And that's a good point, because if you want to sell and you want to buy another house, what are you going to buy? There's nothing to buy. Even the move-up markets, as we notice, and even the luxury market is moving very quickly. But disturbing to me always is obviously change in income, that we still don't feel wages are growing and which are not. And if we add now some inflation and stagnated wage increase, we're not looking too good. So 25% expect better financial situation in the next 12 months, which means 75% are not. So to add to all this, we got to look at evictions, foreclosures, forbearance. Biden just released his new package, and it looks like the eviction moratoriums will be extended. They want to extend it to September, but hopefully only until March. Delinquency rate stays elevated at 6.33%. It's not the highest it has been, as it was in May at 7.8, but remains a full 3 percentage points above pre-pandemic levels. People are in forbearances, so there's no improvement on rate of exits out of forbearance plans. So still 5.2%, or about 2.75 million mortgages are in forbearances. 80% are in forbearance extensions. So no improvement there. but also it's not getting worse. Now, it does get a little worse when we look at the paid rent on time for apartments. So the back rent debt to be estimated around 70 billion by the end of 2020 alone. And we had only a 70.6% paid rent on time in January. Keeping track. And part of it is that the construction industry cannot find any labor because it's just not in fashion, and people don't think they can make a career out of a construction job. And somebody was interviewed who tried to fill roofing crews, and they had a discovery that many of the people they tried to hire could not even read a measuring tape. So a lot of education is needed in vocational schools, so we can put all the unemployed together in the housing crisis. It should be a pretty fairly easy thing to figure out. But I wanted to just switch gears and tell you who made the money and who enriched themselves. So there's a chart from the courtesy of Bloomberg and the Elliott Wave that there was a record year, obviously, for US IPO volume in 2020, and it reached about 178 billion, which is the blue line, and 19 in 2020. But were those profitable companies? No, no profits, no worries. It just keeps. Also, the ratio of US IPOs with negative versus positive net income in the past year, and those companies, or the ratio increased. So again, would anybody invest in your business if you wouldn't show positive cash flow? Not if you're corporate America. But some good news for the local investors. So the instant offers are not instant hit with the buyers. So the iBuyers are not expanding as rapidly, and it is not as enticing right now with the low inventory and, offers. I heard an agent had 68 offers on one of her properties. So that is hard to build a business model, but for local investors, we can go and knock on some doors. So the takeaway is practically for 2021, we'll still be caught in that twilight zone of K-recovery, or politically speaking, in that reality show. Employment numbers are very depressing because they are reversing. So no impact on real estate prices in San Diego yet, but rents in urban zip codes are already showing a decline. San Diego's median home price is flat. Inventory is extreme low levels, impacting real estate professionals and investors' bottom lines. And it will be 2021, the year of the survival and Darwinism about the fittest will survive. So then we have the homeowner prisoner dilemma. I can sell because I can't buy anything. And economic fundamentals gone with the Fed. How far can we push the money printing? There is a brand new risk. So, and wait, there is more. Please dial into a January 23rd event in this coming Saturday. You can go on Eventbrite and look for ADUs in housing. It's a 3-hour Zoom call on ADU regulation, design, contractors, how to find them, and favorite floor plans, and lots of good information. You can find my events on Meetup, Real Estate Investing Field Trip, and that event has been going on for 12 years, usually every third Saturday. Thank you for listening. Don't forget to subscribe and give me a call with all your real estate questions, needs, and transactions.